Very good day, students. In this video, we are going to understand how to determine the taxable value of the perquisite which arises on account of provision of interest-free or concessional loan by the employer to the employee. Okay, and the value is taxable as perquisite. You see the symbol P, which means perquisite. So wherever in the chapter on salaries it is the symbol which you find, then you should understand that this is a perquisite which will be added to the salary income as a perquisite. So we are talking about interest-free or concession loan, and the valuation mechanism is provided under Rule 3. Okay. Now, many a times the employer may provide a loan to the employee, and it may be interest-free. That means the employer will not charge any interest, or the employer will charge a lesser interest as compared to the interest prevailing in the market, and so it will be provided at a concessional rate. So in both the cases, perquisite will arise and the valuation will be done and the value will be added to the taxable salary income. Okay. Now, we need to figure out whether any interest-free or any concessional loan for any purpose, so the purpose can be any purpose. The employee may want to go on a vacation, may want to undergo medical treatment, may want to buy a refrigerator or car or whatever. The purpose can be any purpose. If it is made available to the employee, not only to the employee but also to the member of his household. Now, what is the member of household? Certain perquisites are taxable when provided not only to the employee but also to any member of his household. So even if the loan is not given directly to the employee but to any member of the household of the employee, even then the perquisite will be taxable in the hands of the employee. So member of the household includes spouse, children and their spouses. Okay, so children and their spouses, parents, servants and dependents. Okay, so member of the household is mentioned in the chapter wherever a perquisite is taxable when provided in such manner. So as you can see, in the case of interest-free or concessional loan, where such loan for any purpose is made available to the employee, not only the employee but also to any member of the household. By whom? By the employer. Okay, then it is taxable. The value is taxable as a perquisite. Even if the loan is not made available directly by the employer but by any person on his behalf, even then it is treated as loan made available by the employer and it is taxable as perquisite in the hands of the employee. Okay, so you need to basically check if these conditions are fulfilled, and then you will be able to figure out that yes, I need to then make a valuation of this perquisite and then add it to the salary income. Now, first of all, you need to check whether the amount of loans are petty in nature. So if the amount of loans in the aggregate and the granted by the employer in the financial year one or more than one, so in case of more than one, you need to figure out the aggregate. And if the amount is very small, if the amount is very petty, then the government doesn't want to create unnecessary burden in terms of taxation on the hands of the employees. So the government says that if the amount of loans are petty, what is meant by petty? That means the aggregate is 20,000 or less. Okay, in all, then no perquisite will arise and the value will remain exempt. So nothing will be taxable. Okay, so this is what you need to find out first. But if this is not the case, then you need to find out whether the loan has been made available for medical treatment, but medical treatment of not any and every disease, only for prescribed diseases. And these diseases, a list has been specifically prescribed under Rule 3A. Basically, the list contains it refers to diseases which are very critical in nature. For example, cancer, tuberculosis, and diseases like that. So if the loan is made available for medical treatment of prescribed diseases, even then the perquisite remains exempt and there is nothing which will be taxable on this count. But if this is not the scenario, okay, that means if the aggregate is more than 20,000 and if the loan is not made available for medical treatment of prescribed diseases, then taxability arises and then you need to make the valuation. Okay, one point that you need to note is in case the loan is made available for medical treatment of prescribed diseases, then exemption does not apply to so much of the loan, that means to that extent of the loan as has been reimbursed to the employee under any medical insurance scheme. Okay, so for example, take an example that you are an employee and you have taken a loan for the medical treatment of a spouse for a prescribed disease. Okay, and you have taken a loan of say 1 lakh rupees, okay, and you have incurred the expenditure in the hospital, say of 70,000 rupees, and you have a medical insurance, and you make a claim to the insurance company, and you are reimbursed 70,000 by the insurance company, so you get 70,000. So you have taken 1 lakh of loan and you are claiming it as exempt from the head salaries, and then you are again getting reimbursement, and reimbursement of medical insurance is not an income, so that was also not taxable in your hand. So you are basically getting 1,70,000 as something which will be exempt in your hands. So this is an undue benefit or a double benefit which the government doesn't want you to take, because that will amount to misuse of this provision. So the government will say that, okay, you took loan of 1 lakh rupees, and this loan of 1 lakh rupees will not be exempt to the extent of 70,000, which is reimbursed to you. Okay, so only 30,000, which was not reimbursed, will remain as exempt, but 70,000 will not be exempt, and it will become taxable, and for that you will need to make the valuation as per this rule. Okay, so we will look at an illustration on this count. So how do we make the valuation? If these exemptions are not available, then how do we make the valuation? So the value of perquisite is equal to interest benefit into maximum outstanding monthly balance into 1 by 12. Okay, interest benefit is basically the benefit that you are getting on account of interest, and that is basically the market rate of interest minus the actual interest that is charged from you as an employee. Okay, how do we determine the market rate of interest? We determine the interest rate as on 1st April of the previous year in respect of the loan for the same purpose, and we find out that interest rate not of any other bank but only for State Bank of India, SBI. Okay, so you don't pick up the interest rate of say HDFC Bank or ICICI Bank or any other bank, but you only pick up the interest rate charged by State Bank of India. When? As on 1st April of the previous year, not on 31st March of the previous year, not on the date when the loan is granted or when the amount is received or when the amount is paid, on the 1st April of the previous year. Even if the loan is granted say on 1st of July, you will pick up the interest rate of State Bank of India on 1st April of the previous year, not of any other date, in respect of the loan for the same purpose. So if you are taking a loan for medical treatment, okay, so you will pick up the interest rate charged by the SBI on medical loan. If you are taking a consumer loan, then you will pick up the interest rate charged by SBI on 1st April for a consumer loan. Okay, so this will be the market rate of interest basically. From that you will reduce the actual interest rate charged. So if market interest rate, if the interest rate of SBI on 1st April is say 10% and you are not charged any interest, that means what is the benefit that you are getting? The interest benefit is 10%. If you are being charged 3% only, then interest benefit is 10% minus 3% is 7%. Okay, so this is the interest benefit. Okay, next you need to find out the maximum outstanding monthly balance. What is this? It is the aggregate outstanding balance for each loan as on the last day of each month. So if there is only one loan that has been taken, for that loan you need to see what is the outstanding balance of that loan for each month on the last day of that month. Okay, so if you have taken a loan in July, okay, and say you are making repayment every month, okay, and you are still repaying the loan at the end of the previous year, so you will have outstanding balance at the end of July, then you will have some outstanding balance at the end of August, at the end of September, October, November, December, January, February, March, so on. So you will pick up all these amounts and you will aggregate, you will total up all these amounts. So what we are saying is aggregate outstanding balance for each loan as on the last day of each month, not on the first day, but on the last day of July, what was the outstanding balance, last day of August, last day of September, last day of October, and so on. Okay, till the time the loan is fully repaid. So this will give you the maximum outstanding monthly balance, and you will aggregate all of this and you will multiply it by 1 by 12. Okay, so this will be the value of perquisite. So the value of perquisite will be what? You find out the interest benefit, you find out the maximum outstanding monthly balance, and then you multiply this, and then finally by 1 by 12, and that will give you the taxable value of perquisite. Now a few important points. Petty loans are not taxable, and medical loans for prescribed diseases are not taxable. Otherwise, perquisite is taxable in respect of all other loans irrespective of their purpose. Whatever be the purpose, if this is not the case, then valuation will need to be done. Okay. Now we saw that petty loans up to 20,000 in the aggregate in the year are exempt and the value is not taxable. Okay. Now this limit of 20,000. Sir, is this limit per loan or is it the aggregate of all the loans put together? No, it is not per loan. Loans aggregating up to rupees 20,000 are exempt. And sir, what happens if this 20,000 limit is crossed? Then once the aggregate exceeds this limit, then interest on the aggregate is taxable, not on the amount in excess of 20,000 only. But interest on the aggregate is taxable, sir, from what date? From the date the aggregate exceeds this limit. Okay, keep this in mind. So for example, if C takes the first loan of 16,000 on 1st May 2024, so this is not exceeding 20,000, so nothing will be taxable. But he takes the second loan of 5,000 on 1st July 2024, so 16 plus 5, 21,000 will exceed 20,000. So interest on 21,000 will now be charged to tax with effect from 1st July 2024. This is how it will work. Say the medical loan has been taken for prescribed diseases and it is of 1 lakh rupees. So it is exceeding 20,000 rupees. So sir, will it be exempt or will it be taxable? So beta, medical loan will remain exempt even if the amount is more than 20,000, because if the medical loan is for treatment of prescribed diseases, it will remain exempt. This 20,000 is something that you need to check first, and then you need to check this. And irrespective of the amount, if this medical treatment loan is for prescribed diseases, it will remain exempt. Okay, even if it is more than 20,000. Now the important point that you need to check is, when you are finding the outstanding balance of the loan as on the last day of each month. Okay, it is the last day of each month that you need to take into account. Okay, and this will be based on the date of repayment of the loan. For example, if you take a loan of 1 lakh on 1st of June, and say 10% of this 1 lakh is repaid on the last day of every month. So last day of June, you pay 10,000, last day of July, you pay 10,000, and so on. So you have to check what? You have to check outstanding balance at the end of each month. So first, you will check end of June. First month, June, you will check end of June. And end of June, you will already have paid 10%. So outstanding balance at the end of June will be 90,000. At the end of July will be 80,000, and so on. Okay. But if in the question it is given that the loan is repaid on 1st of every month, then first month is June, so end of June will remain 1 lakh, because you will pay 10,000 firstly when? On 1st of July. So end of June will remain 1 lakh, end of July will be 90,000, end of August will be 80,000, and so on. So don't make this mistake. Check very carefully the question as to the mode of repayment. When is the date when the repayment is made, and accordingly decide what will be the outstanding balance on the last day of the month. Now when you are checking the petty loan limit of 20,000, or when you are checking this outstanding balance on the last day of each month, what you need to check is basically the principal amount or the amount of loan. You should not add the amount of interest to this. Right? And as we noted in the earlier part of this video, even if the loan is made available to any member of the household of the employee, we saw the meaning of member of household, even then the perquisite will be taxable in the hands of the employee. Now let's look at 5 quick examples to understand how do we compute. Roshan is employed with C Limited. Compute the taxable value of perquisite in respect of loan provided to him by C Limited in each of the following cases for previous year 24-25. Case 1, it is a consumer loan of 20,000 given on 1st July 2024 at 5% per annum. There is no repayment during the previous year. An SBI lending rate for same purpose loan on 1st day of the previous year, that means on 1st April 2024, is 15% per annum. Okay, so in this case the perquisite will remain exempt. Since the amount of loan is 20,000, so it does not exceed 20,000. And it has been assumed that no other interest-free or concessional loan was provided by C Limited. So aggregate is 20,000 but doesn't exceed 20,000. So this remains exempt. No taxable value in terms of perquisite arises. Case 2. Loan has been taken for treatment of prescribed diseases of daughter. Now daughter is member of household. Medical treatment, prescribed disease, so that medical treatment exemption will apply. 1 lakh loan given on 1st May 2024 at 2% per annum, and during the previous year only 20,000 has been repaid out of 1 lakh, and SBI lending rate on 1st April 2024 is 10% per annum. So in this case also the perquisite will remain exempt, since loan is for medical treatment of prescribed diseases for member of household daughter. So even if it is more than 20,000, it doesn't matter, the value will remain exempt. In case 3, it is a case of car loan of 5 lakh given on 1st October 2024, 0% interest, and the SBI rate is 12% per annum. So 20,000 exemption doesn't apply, petty loan exemption doesn't apply, and medical loan exemption doesn't apply. So valuation will arise. And therefore, first we need to find out what? Interest benefit. Interest benefit is 12% per annum minus 0. It is 12%. So 12% minus nil is equal to 12%. Okay. And then what we need to find out? We need to find out maximum outstanding monthly balance. And here if you note, no repayment of principal has been made during the previous year. So for all the months at the end of October, November, December, January, February, March, the outstanding balance will remain 5 lakh. It will not change. So if in the question you find out that the outstanding balance remains the same throughout the year without any change, then you simply need to first figure out the interest benefit, which is 12% minus nil, that is 12% in our case, and then you simply need to calculate the taxable value as 12%, which is the interest benefit, 12% of 5 lakh for 6 months. Interest benefit into 5 lakh, which is the outstanding balance continuously at the end of each month till the end of the previous year till March, and the period from 1st October to the rest of the year, number of months is 6. So basically the interest of 12% on 5 lakh for 6 months, 30,000 is the taxable value of perquisite. So note that if the outstanding balance at the end of each month remains the same throughout the year, so you just need to multiply the interest benefit by the amount which is remaining the same constant, okay, for the number of months, and on per annum basis you need to find out the amount of interest that will be the value of perquisite. Clear? Case 4, loan is taken for vacation for 10 lakh rupees on 1st of December at 5%, and repayment is done of 1 lakh on 1st of every month. 1st of every month, and 15% per annum is the SBI rate. So interest benefit is what? 15% minus 5%. 15% minus 5% is equal to 10%. Now here the outstanding balance is not constant, so we need to apply a different method. Okay, so we need to go by this formula: aggregate outstanding balance as on the last day of each month. So we need to calculate the maximum outstanding monthly balances as given below. Principal is repaid on 1st of every month. So repayment will be, first repayment will be what? When? 1st of January 25. 1st of January, 1st of February, 1st of March. So what we need to do? We need to figure out the outstanding monthly balance. The loan has been given in December. So first month will be December, then January, then February, then March. So end of December, balance will be what? No repayment in December, so it will remain 10 lakh. January, end of January, 10%, 1 lakh will be repaid, so balance will be 9 lakh. In February, it will be 8 lakh. In March, it will be 7 lakh. So we calculate all these outstanding monthly balances at the end of each month. Then we aggregate these, and this comes to 34 lakh. So what we do? As per the formula, 10% interest benefit multiplied by this 34 lakh, which is what? Which is the aggregate of maximum outstanding monthly balances multiplied by 1 by 12. right? Interest benefit into maximum outstanding monthly balance, the aggregate multiplied by 1 by 12. This is what we need to do. So when we do this, we will arrive at 28,333. This will be the taxable value of perquisite. This is method number 1. There is another method which will give the same result. So here what we are doing, we are aggregating the outstanding balances, and aggregate we are multiplying by 1 by 12. The same can be done separately for each month. Okay. So December, January, February, March. Okay. And 10 lakh, 9 lakh, 8 lakh, 7 lakh, same. But now instead of aggregating, we compute the taxable value for each month. So for each month, we will apply the 10% rate. 10% rate. So 10% into 10 lakh into 1 by 12. Because we are calculating it for 1 month. So 10 lakh into 10%. But for 1 month, the interest will be 1 by 12. So it will be 8333. Similarly, for January, February, March, it will be this. And when we total all of this, it will come to same 28333. So whichever way you are comfortable. Okay. This is method 1. This is method 2. You will get full marks in both the methods. There is no difference whatsoever. Result will remain the same. In the first method, you need to figure out the outstanding balance on the last day of each month. You aggregate it, and the total is what you multiply by 1 by 12. So interest benefit into this total into 1 by 12. Or the same way, instead of totaling this, you compute the interest on this amount for 1 month, for each month. So this for 1 month, this for 1 month, this for 1 month, this for 1 month, and total this interest, and this will be the total interest in terms of value of perquisite. Now case 5, which is the last case, and the loan is for treatment of prescribed diseases of spouses. Spouse is member of household. Medical loan is taken. Okay. So it will be covered. The loan is for 6 lakh taken on 15th of June 2024, 0% interest, and repayment of principal is 30,000 on 20th of every month. SBI rate is 10%, and medical reimbursement, health insurance, it is also received. So 4 lakh has been received on 5th January 2025. 4 lakh has been received on 5th January 2025. So loan for medical treatment of prescribed diseases for member of household is exempt. However, as we noted above, exemption does not apply to so much of the loan as is reimbursed under medical insurance scheme. So that means while 6 lakh is exempt, but out of 6 lakh, 4 lakh has been reimbursed, so 4 lakh will not be exempt. So 4 lakh has been received on 5th January 2025. That means taxability will arise from 5th January 2025. Till this reimbursement is made, the 6 lakh will remain exempt. Right? So perquisite is exempt from June to December 2024 because the loan was taken in June and reimbursement is received on 5th of January. So till December, the perquisite is exempt because there is no reimbursement. It's only a medical loan taken from prescribed diseases for member of household. It remains exempt. Medical reimbursement of 4 lakh is received on 5th January 2024. Sorry, it should be 5th January 2025. Okay. So computation of taxable perquisite will arise for January to March 2025. So first we will compute interest benefit, which is 10% SBI rate minus nil actual interest rate charged. So interest benefit remains at 10%. And now we will employ the same method. So taxability will arise for January, February, March. So January, February, March, and we find out outstanding balance of loan as on the last day of each month. Okay. So what is the amount of loan which will be taxable? It will not be 6 lakh. From January, 4 lakh will be taxable because exemption is only to the extent the amount is not reimbursed. So 4 lakh will not be exempt and the balance will remain exempt. So 4 lakh will not be exempt. So computation will be made in respect of 4 lakh. So we start with 4 lakh. And repayment is what? Repayment is 30,000 on 20th of every month. So 20th of January it will be paid. So 30,000 will be paid. February 30,000 will be paid. March 30,000 will be paid. So January for 4 lakh minus 30,000, 3 lakh 70. And similarly for February and March. So we will total all this. You will total all this and then we will find out the taxable value. 10% interest benefit into 10,20,000 into 1 by 12, 8,500. Just as in the previous example, we can employ method 2 as well. Then instead of totaling this up, we can find out the interest for each month. So on 3,70,000 at 10% for 1 month, okay, this for February, this for March, this total, this it will be 8,500, it will be same as this. So this is how we calculate the value of perquisite on account of interest-free or concessional loan given by the employer or any person on his behalf to either the employee or any of his member of household. There are these questions in the practice book. You please solve these questions. If you have any doubt, confusion, query, question, write immediately in the comment box, or if you have my WhatsApp or Telegram number, just call me up or write to me and I will respond to you as soon as possible. Hope this concept is clear to you and you will not make any mistake in the computation when a question of this kind comes in the exam. See you very soon in my next video. Good luck and goodbye.